going to show you guys exactly how to do a top-down analysis using ICT concepts. I'm also going to show you how you don't need a daily chart to determine the high time frame bias. You can just use your 60-minute as your daily chart. I'm going to show you what levels to target, what time to trade, and from there you can hunt for ICT 2022 setups. And I think the best way to explain this is through one of my trades I took yesterday. So here we've got the S&P 500 index. You can see on the daily there just isn't too much to work with. We can see that institutional order flow has been bullish. There is a daily fair value gap that has formed here ever since it's been rejecting it on the 31st of January. So for the past few days, there isn't just too much to work with. And if daily isn't offering too much info, like I said, we drop to the hourly chart, also known as the 60-minute time frame. I like to trade with this indicator here that offers me the visibility of each kill zone. So I normally trade the New York kill zone. And what do you mean by kill zone, Les? Well, kill zones are specific time windows during the trading day where volatility is higher. So like I said, with the New York kill zone, that's especially more helpful for me because it happens when the Asia and London session has finished. That gives me the luxury of looking at what the market has done, allowing me to make a more informed decision of where price is potentially heading. So the window for New York kill zone is 7 to 10 a.m. for Forex pairs. That's Eastern Standard Time. And for indices and futures, it's 8:30 to 11 a.m. Eastern Standard Time. So for the S&P 500 index, I trade from the 9:30 to the 10:30 window. Why? Because generally news releases occur at 8:30 a.m. and equities market open at 9:30. So that gives me a lot to work with, knowing exactly what price has done during 8:30. So at 9:30, I can equip myself with information to trade. So right from the get-go here on the hourly time frame, we can see that there's buy-side liquidity here and also buy-side liquidity here. So we can see if we go down to the 15-minute time frame, so that's the New York kill zone open for indices, 8:30 to 11. I've also got these lines plotted to show the opening times, 8:30 and 9:30. We can see at 8:30 here, price is slowly traveling towards the upside. Price has created a fair value gap here, indicating bullishness in terms of price. So where's the draw of liquidity? The draw on liquidity, I should say. It would be towards the buy side liquidity here. Had I taken a trade here and put my stop loss above this high, I would have been taken out. So that's why I prefer trading at the 9:30 open. That gives me visibility of where price is potentially heading. We can see as well that there's another level of buy side liquidity here, which price is potentially targeting. So we can see at 9:30, price took out Asia high, London high, sweeping liquidity of this buy side here with huge displacement coming towards the downside. This was when I took my trade. I was actually monitoring my trade on the 1-minute time frame. So if we look closely here, we can see that when price took out liquidity here, price traveled very much quickly towards the downside, creating a market structure shift right at this candle here with heaps of fair value gap. And Les, if you're asking me what levels should I be targeting in terms of where to put my stop loss, or rather where to take out and exit your trade. So I was monitoring the 1-minute as well as the 5-minute. I noticed that there was actually a few fair value gaps that has formed. So there's one here. There's also another one here. We can see when price took out the buy side liquidity here, it traveled down with speed. So the levels that you can target are imbalances and inefficiencies like that, or you can even target levels here, which are also known as external range liquidity. In this case, it's the sell side liquidity. I was actually looking to do a trade that's a quick in and out, so I targeted the imbalance here. So if I chuck on my executions, I took my trade here as soon as the market broke structure, and I took it off at this 5-minute fair value gap. And you'll be asking me, Les, why not target the sell side liquidity? Because as you can see here, price actually consolidated. It did not actually reach all the way down to the sell side liquidity. That's the beauty of lower time frames. If you enter a trade here, for example, you enter a trade here, and you put your stop loss above this high, and if you're aiming just for an imbalance here, it gives you around 1.8 to 1 risk to reward ratio, which is really, really good. Ideally, it's a 1.2 risk to reward, which I normally aim for, but this is good enough for me. The trade duration was around, let's say, so I took my trade here at 9:57. I took it off at 10:02, a 5-minute trade for 1 to 1.76 risk to reward ratio. You can always put your stop loss above a high, the high here, or if you want to be a little bit more risky and a bit more aggressive, you can put it at the closest candle which does not have a fair value gap. What do I mean by that? So if I take these lines away, you can see there was a 1-minute fair value gap that has formed here. You can put your stop loss above this candle here, but if you want to be a bit more safe, you can put it above here. Why not here, Les, you're asking me? Because price has already taken liquidity up there, and when it displays so quickly down here, it's wanting to reach for the imbalances here and potentially external range liquidity here. So it's something that I've experimented quite a while, so I'm quite confident with my trade when I put my stop loss here and then I was targeting here. I could have gotten a bigger trade, like I said here, but you just never know where the market's going to go. The timing of the exit and the timing of the entry, the mastery of your trading psychology and discipline is where it takes you far. So I just want to get in and get out, earn the profit, and call it a night. So that's it, guys. I hope you guys found this video helpful. If you guys enjoy this kind of content, drop a like and comment below if you have any questions. I'll catch you at the next one.